Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of November 18th through November 22nd. We're in part one of our weekly trading game plan. We'll try to help you make money trading as FOMO returns to markets. Hopefully, you all know FOMO stands for fear of missing out, and we've had plenty of FOMO, plenty of fear of missing out in all of the markets over the past couple of weeks. So again, we'll try to help you make money trading as FOMO returns to the markets. So let's get started. Here's our Google document with our notes for part one of our weekly trading game plan for November 18th through November 22nd. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes Google documents contain links to bonus videos, the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. We keep all of our notes documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weekly trading game plan notes documents, and you can also find a direct link to that Google Drive folder in the description box below. Welcome, Ellen Krantz and Ricky Khan. Thank you for joining us in the chat today. Hope you all had a great trading week and are doing well. So firstly, we'll look at how the markets ended up on Friday, and then we'll do a breakdown on the indices and the technology components. So if we jump over to FinBiz, you can see although we had plenty of FOMO earlier in the week, we gave kind of a profit-taking correction on Friday. So we can see the Dow was back down 0.7, NASDAQ down 2.24. S&P down 1.32. We had many more decliners than advancers, so 69% declining, 28% advancing. Only had 25% new highs, 75% new lows. We've now got more than 50% below their 50-day moving average, so 47, 48 above, 52% below. Still got 58% above their 200-day moving average, 42% below. So even though we had a little bit of a market on close pop, again, it was options expiration on Friday. Overall, the day was quite bearish. Again, profit taking, probably out of the FOMO we saw earlier in the week. Saw a major rotation out of the Mag 7, out of technology. The only green sectors were financial, utilities, some defensive sectors, and Tesla. So the only one of the Mag 7 that was green. Look at some of the recent news. Souring S&P profit outlooks, a bad sign for the rally. Weak conviction had interrupted the stock market's Trump rally. NVIDIA results. We'll talk about NVIDIA's upcoming earning results this week. NASDAQ drops 2.2. We'll talk about Trump's RFK Jr. pick, hits pharma. Fed rate worries hinder post-election rally. So again, some of that stifled the FOMO late in the week. Saw crude breaking back down, broke down below 67. So we'll see if it retests its recent lows. Natural gas has been testing $3, getting rejected. We'll see if that retests $3. Gold had a significant breakdown. Now getting resistance around 25.50, or support around 25.50, resistance around 25.75 or so. Again, we see all the futures pointing down. Treasury yields popped back up again, so we see the 30 years back over 4.6, 10-year 4.42, 5-year about 4.3. So again, bond prices declined, bond yields popped up. Again, we see Bitcoin's been making a run, plenty of FOMO in the Bitcoin market, possibly a lot of people saying it'll hit 100,000. So we may see further FOMO in the Bitcoin market, and we may see a test of that 100,000 level at some point. Again, we'll see dollars strengthened against the foreign currencies, and we'll see that in the futures as well. Welcome, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. So now we'll quickly look at a breakdown of the major indices and then the technology components. Just a quick reminder, you can access these screeners in the notes documents and also in the screeners tab in our ETFs and Watchlist Google Sheets. So if we first look at the major indices, so we see these big gap up on the post-election FOMO. Several days, broke out of the Dow broke out of its upwardly trending channel, rolled over, broke down below that trend line, got a large gap to fill back down to where it jumped up pre-election. Similarly, IWM, big gap up, making a new 52-week high, setting a new trend, and then broke back down again. Some more gap fill. It looks like it got close to that previous high, but further pre-election gap to fill. Similarly on the SPY, not quite as exuberant a run up, but it also broke out of its channel on, the post-election FOMO, rolled back over, broke back within that channel. And again, looks like the potential for filling that gap, a retest of that lower trend line. Qs already gap filled most of its gap, pre-election gap, back down to its trend line, so possibly more support in technology in the Qs. So again, my humble opinion, just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. But again, I wouldn't be surprised at all if we didn't see these gaps fill. So a potential more downside in the Dow, particularly the Russell, a little bit in the SPY, and maybe we'll get a bounce in technology. Welcome, Ketan. Thank you for joining us. Hope you're doing well. Had a great trading week. So if we look at the components within technology, and we see plenty of FOMO, plenty of exuberant rallies in the technology components post-election, big time in ARC, gapped up a couple times, set a new recent high and rejected, coming back down, filled the second gap. Again, plenty of a downside in ARC. Probably come back down and fill that gap and retest that lower trend line. Similarly in the FANGs, it actually gapped down. Looks like it could retest and get back in this channel. We saw, again, rotation out of the Mag 7 on Friday, profit taking there. Big drop in biotech. Again, RFK Jr. being appointed as the Health and Human Services Secretary. Very negative for pharma, big pharma, biotech. So I saw that dramatic drop in biotech. Probably again further downside to come there as well. Semiconductors didn't really participate as much in the FOMO post-election FOMO and has been trending down. Broke down below its lower trend line. So again, although again we've got the NVIDIA earnings coming up, that may give a pop to the semiconductors. So SOXL. Triple Qs, triple Qs, similar to the NASDAQ. See it rolled over very close to its lower trend line, close to its 50-day moving average. Broader technology, again, gap back down to its 50-day lower trend line. So might get a little bit of a bounce in the broader technology as well. So I hope that all helps. Grab a quick drink and we'll look at a breakdown of the groups and the sectors and the industries. Okay, if we look at a breakdown of the groups and the sectors and the industries, see Friday again, a risk off, a rotation back into defensive um, groups, sectors, utilities, financials, and a little bit of real estate. Big rotation again out of healthcare, out of technology, out of cyclicals, communication services. Again, heavy Mag 7 weighting in those. Welcome, Walter Lyons. Thank you for joining us. Hope you had a great trading week and are doing well. For the week, again, pretty defensive. Financials, energy, utilities, and big rotation out of healthcare, basic materials. We'll see gold and silver rolled over. Negative for real estate. Bond yields pop back up. Industrials also negative for the month. Again, cyclicals, financials, energy, industrials. So again, even though we had that, FOMO, post-election FOMO, big run up, most of the sectors have been negative for the week, negative for the month. If we look at industrials, big jump back up in aluminum. Probably, I don't know if that was Alcoa or somebody must have reported positive earnings. Some REITs, utilities, can see that rotation back into utilities. Some REITs, oil and gas midstream. Out of other REITs, banks, negative. Again, mortgage-backed REITs, sensitive to the 10-year yield. Gold, again, negative. Copper, oil. Again, silver and gold rolling over. Very negative on solar. Again, post-election rotation we've talked about. So the sentiment remains very negative for solar. Very negative for semiconductor equipment. So for the week, some farm products rebounding, oil and pipelines, midstream, utilities, uranium, pretty volatile. Got some news out of Russia's restricting enriched uranium exports, although we had already restricted their imports. So see a lot of volatility in the uranium stocks, generally negative for REITs. Again, silver pretty negative, solar negative, steel, gold very negative, we're getting rolled over, and very negative for biotech. So very similar for the month, generally negative for REITs, generally negative for silver, uranium, solar, gold, chemicals, etc. I hope that helps. Next, we'll look at the economic news from last week, the upcoming economic news for next week. So quickly go over the highlights and my notes, and then very quickly go over the rest of the data in investing.com. Just a quick reminder, as the important economic data comes out, important economic news, I try to capture that and post that as quickly as possible in our Discord. Our Discord's free to join. We'd love to have you join our Discord, participate in all kinds of discussions related to trading, help your fellow traders make money trading, get help from your fellow traders to make money trading. And again, as this economic data and news comes out, I try to post that as quickly as possible in the Surf the Markets channel in our Discord. So grab a screenshot from investing.com, grab the raw data. Also, as other important economic data and news comes out, like oil inventories, natural gas inventories, etc., try to post that as quickly as possible in the Surf the Markets channel in our Discord. So again, join our Discord, great place to get real-time economic data and news, and also participate in discussions with your fellow BeachBum traders. Welcome, Hamster One. Thank you for joining us. Thank you for the positive reminder to please help us with our YouTube channel and the algorithm. Please smash the like button, and we appreciate all of your help and support. So very quickly, not a whole lot of data Monday, Tuesday. Wednesday, we got CPI data. It's pretty much in line. So we see year on year in line, 3.3, month on month in line, 0.2. Real earnings in line. So again, all the CPI data pretty much in line. And again, this didn't quell the FOMO in the market, even though this shows that inflation is not really coming down, which could reduce the probability of further rate cuts by the Fed. But again, the fact that it wasn't worse, the market took that as positive and continued on the FOMO run. Thursday, we got PPI data, so producer price index. It's a little bit higher, ex food and energy than previously. So, and the year on year is a little higher than expected, month on month as expected, but up from previous. So again, inflation not really coming down. And initially, the market took that relatively positively. Initial jobless claims was less than expected, continuing claims a little less than expected. So again, job market's resilient, inflation's not really coming down. So again, in my humble opinion, not a whole lot of reason for the Fed to continue cutting. Not to say they won't continue, but the data I see says they don't really need to cut further at this time. Friday again was options expiration for November. Again, we saw a lot of volatility, profit taking, a significant rollover in the markets. I don't know if part of that was in part due to the November options expiration. We also got retail sales data. So the retail sales data was actually better than expected. Core a little less than expected. So again, the consumer continues to spend, the economy continues to be resilient. So again, no issues with recession anytime soon. So now let's look at the rest of the data from last week, and then we'll look at the data for next week. Yeah, part of the correction in the market was Fed Chairman Jay Powell came out in a speech and kind of threw cold water on the probability for a December rate cut and possibly slowing the pace of rate cuts in 25. So again, another reason for the late week correction in the markets. So let's see what other data. We've still got Fed officials talking, so we'll hear what they think about future rate cuts. Bond auctions about in line. Mortgage rates up again. Again, bond yields up, mortgage rates up, negative for the housing market. Talked about CPI data. Crude oil stocks down, but again, we saw oil prices decline. Talked about PPI data and jobless claims, natural gas storage up more than expected, but again, we see natural gas prices generally trending up, but again, pretty volatile. Crude oil imports. Talked about retail sales, capacity utilization, stable, production down. So again, manufacturing continues to slow. Baker Hughes dropped, oil rig count dropped by 1, total rig count dropped by 1. But again, we saw oil prices decline. Let's look at the economic data for next week. Some housing data. Building permits, housing. So we see mortgage rates go up, potentially impact the housing. Get mortgage rates, jobless claims. some manufacturing data, and then Michigan sentiment. This will be interesting to see if the consumers' expectations for inflation are coming down or pretty stagnant. Again, this will be an input into the Fed's interest rate decision. And we still got earnings. Just a quick reminder, the big earnings that everyone will be watching is NVIDIA on Wednesday after market close. So again, major impact on semiconductors, on the whole AI FOMO trade. So NVIDIA has a tendency to beat and raise on earnings and be very positive if it's less than expected, and the expectations will be very high. So anything that doesn't meet those expectations may be very negative for NVIDIA. Also further for the semiconductors, further for the AI trades. They come out as, exuberant as expected and as typical. Might see a pop in those sectors, semiconductors, AI trade, possibly cloud providers, the Mag 7, the mega caps might all get a bounce off of the NVIDIA earnings on Wednesday. Otherwise, you can see the whole list of who's left to report earnings in this earnings season in investing.com. So again, recommend you go through the list, see if there's any in a sector or with a stock that you're interested in that may impact your trading. And you can hear how we trade around earnings via the link to the video in our notes. So again, the big earnings will be NVIDIA on Wednesday. I'm not aware of anybody else that's as significant. So you can go through the list and see how that may impact your trading for the week. So I hope that all helps. Again, the next Fed decision isn't until mid-December, and then we'll get a new SCP. So again, all this data will be impacting the probabilities they continue to cut in December and going forward into 25. Okay, let me grab a drink and we'll look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 40 free fractional shares of stock. If you open and fund your account with as little as $2,000, you get 40 free fractional shares of stock, each worth 3 to 3,000. You fund for 500 to less than 2,000, you get 20 free fractional shares of stock. They also keep emailing me on bonus interest on your uninvested cash. So they also offer additional promotions. So if you join with our affiliate link in the description box below, you can get your free fractional shares of stock, any other promotions they're offering at the time, and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen in the online browser version of Webull. So we can see on Friday we had many more decliners than advancers, but the percentage of decline was very small. So percentage of advancement very small, so pretty tight, even though we had so many more decliners than advancers. Thought this net inflow was quite interesting. It was positive. So even though the indices were negative, we had more declining stocks. There was a significant inflow into both the NYSE and the NASDAQ starting at about 11 o'clock. NASDAQ kind of leveled off then, but again was generally positive. And the NYSE grew significantly throughout the day. What this tells me is the potential for a bounce, even though we saw all the indices rolling over, headed down. This inflow tells me we might get a bounce early in the week, and then we'll see where we go from there. See sentiment now has moved from greed to neutral. So we were in a greed sector, plenty of FOMO. And we will see in the history the last couple days of the week, we rotated back out. So we see that FOMO right after the post-election ran up until about, what is that, Wednesday, Thursday. And then we started to roll over, and now we're back into a neutral setting. So, as we'll talk about later, be fearful when others are greedy. When this peaked out about 67, probably saw some profit taking, people getting fearful as the greed indicator kind of topped out. So I hope that helps. Also see treasuries, the 1 year slight decline, pretty flat. 2 year again pretty flat. 10-year up a little bit. Okay, just a quick reminder, you can also see the earnings calendar on a day-by-day basis, and we can roll that to next week here in the calendar widget in Webull. And you can see, day by day, who's reporting, what time, etc. So again, here we see NVIDIA, we see what time. So it says 7 o'clock on Wednesday. You can see their expectations. So again, a great way to see the upcoming earnings on a day-by-day basis. Look at the best performing industries for the week. Welcome, Douglas PC. Thank you for joining us. Hope your trading's been going well and you're doing well. So if we look at the best performing industries for the week, showing media, talking about mergers in the media space, financial somewhat positive, utilities, a lot of utilities, oil and gas equipment and services, and utilities, oil and gas pretty split. Uranium actually slightly negative, except for certain ones. Retail actually mostly negative. Transports. Get the ETFs. So down on the Qs, down on small caps, down on the Russell, down on the Dow, down on S&P. So ETFs as of Friday pointing negative on all the indices. Up on the VIX. So we saw the VIX bottom down below 15, as we'll see. But now the ETF is pointing up. Bitcoin long. Get down on the Russell. Negative industrials, healthcare, financials positive, energy negative, real estate slightly positive, again, utilities. Everything else pretty negative. Basic materials a little positive, mostly uranium and lumber. Natural gas positive, metals. I think FXY is China. Okay, so let's also look at the futures. So we'll look at the futures in FinViz. Just a quick reminder, you can also now trade futures in Webull as well. So you can hear there how you can trade futures in Webull, see their current offers via the discussion in our Discord, via that link in our notes. So again, we see all the indices, big FOMO run up after the election, and we got a rollover. So the Dow's coming back down to that previous high, S&P about down to its high, 5,900, probably may get some support there, but again, we've got significant downside to test the pre-election lows. NASDAQ rolled over a little more severely, broke down below its previous high. So again, potential more downside to retest the pre-election low, and steep decline in the Russell after that excessively exuberant run. Again, it's got a little bit of room down to 2,300, test its previous high, and then we'll see if it tests the pre-election lows. European stock market rebounded a little bit. Nikkei down, but just kind of oscillating. And we saw VIX bottom and then bounce back up on Friday. We look at the term structure for the VIX. That was interesting as well. Just a quick reminder, you can see the VIX term structure, VIX futures term structure chart, and plenty of other tools and resources on our homepage in the links section of our homepage, beachbumtrading.com, bum without the U in the links section. So if we scroll down to reference links, see the VIX term structure. And last week it was in, it had gone into contango. We had a positive slope across the VIX term structure yesterday. The front months, November, December, went back into backwardation. It did flatten out a little bit, looks like later in the day, but that backwardation was a little bit steeper. We could see the current VIX is still below the VIX futures, and we see now we're getting a significant jump up as we get into next year, and then still in the 18s, but VIX futures still pretty low and pretty flat November, December. So things, ETFs like the UVXY, etc., that use the front 2 months, not a whole lot of contango right now in those 2 months. So we'll see if that steepens back up or if we get further backwardation again in the front month of the VIX term structure. So big reversal from last week. We've had significant changes in that term structure over the past 2 weeks. So I find that quite useful and interesting to watch during the day as well. We saw oil break down below 70, below 68, below 67. So we'll look at the recent low. It's pretty close to the recent low. And then we've got the September low. So I'm looking for opportunities. I thought we might get back into USOI on Friday, probably get back in early next week. Hopefully we'll get a retest of that recent low in oil and give us an opportunity to get back in USOI, monthly dividend payer on oil. So again, natural gas pretty volatile, but generally trending upward, keeps trying to test that $3 level, getting rejected. But again, the overall longer term trend is up, but again, a lot of volatility and major rollover in gold. So we see it tested 2,800, failed, and now it's just breaking down and consolidate some support at these levels, at the $100 levels, the 50 levels. Now we're down below 2,600, probably get support at 2,550, and we'll see if it goes back down and retest 2,500. So again, major reversal in the trend in gold, and dollar strengthening, putting downward pressure. Also, we're past the election. There's also a potential post-war benefit to downwardly trending gold. Silver similarly got plenty of support. We see it tested that 30 support level, held so far. So we'll see probably some consolidation. That's 30 is a pretty stable support level. That breaks down, then it'll probably retest 28. Similarly, downtrend in copper, palladium, platinum, all the precious metals downtrending. Corn's holding up pretty good. Wheat had downtrended, or oats downtrended, looks like it bounced. Wheat has rolled over. It's broken down below that 540 level. It's getting close to its recent low. Again, another potential opportunity is we're looking to long wheat again with the WEAT ETF. So again, another, if we see a retest of this recent low, we'll go long wheat using the WEAT ETF again. Coffee spiked up, lumber pretty high, and we saw yields, bond yields back up, so bond prices down. They're I think below their pre-cut, pre-interest rate cut levels. So again, potential opportunity in bonds to go long on bonds at different durations. So again, they're all approaching their 52-week lows. Dollar a lot stronger. See the euro's headed back down to parity. So euro very weak, dollar very strong. Yen hasn't really shown a lot of strength. That may be below the pre-interest rate raise of the BOJ. So that yen carry trade might be a source of volatility in the future again if the BOJ raises interest rates. So tons of opportunity in the markets. It's just a matter of picking the ones that you like the best, what style of trading you want to use if you're trading futures, ETFs, options, etc. So again, plenty of opportunities. Okay, I'm going to skip forward and we'll come back to ETFs as I have a lot of potential topics to cover under ETFs. So let me grab a drink and we'll talk about our theme for this week, and then we'll head back to ETFs and see how much we can cover this week. Okay, again, our topic for this week, our theme is FOMO returns to the market, where FOMO is fear of missing out. We've talked about FOMO and how, in my humble opinion, you can make money trading FOMO, avoid being hurt by FOMO. In various videos related to various topics, we talked about it in detail when the AI exuberance hit, and the curve with FOMO with relative to the AI trade. So you can hear that via this video. Again, we talked about the Buffett adage, be fearful when others are greedy and greedy when others are fearful, that we've talked about several times. Also, there's the usual fear and greed index, and we've talked about how you can use that to see when the markets are getting too greedy, when maybe you should be fearful, and how you can analyze fear and greed in the stock market. In my humble opinion, FOMO goes both ways. On the upside, people are afraid they're missing out of the rally, so they want to get in, might be buying at the top. And then when it rolls over, like we saw Thursday, Friday, now they're underwater. Now the market's turning down. Again, in my humble opinion, FOMO goes both ways. So on the downside, they're afraid they're not going to be able to sell, or they're going to be forced to sell at a lower price, so they want to get out now. So again, it fuels the trend on both sides. On the upward side, driving prices up to overly exuberant levels. On the downside, they typically call that panic, people trying to get out before prices continue to erode. So again, in my humble opinion, FOMO goes both ways, and I think we saw that all recently, the post-election FOMO, the Trump trades, everyone jumping into those. We saw big gap trades, even in the growth stocks, money losing stocks, etc. And then Thursday, Friday, we saw a rollover and a little bit of a potential panic on Friday. We'll see if that continues. So again, let me know, what do you think? You think the FOMO, the post-trade FOMO is over? Are we going to see a resurgence next week? Love to hear your feedback on that. Also, we've been talking about making money trading in November and post-elections, so you can hear all of our discussions about how to trade, make money trading in November and in the fall. So again, we've been talking about strategies post-election, making money post-elections and in November for several weeks now. So hopefully all those videos will help you with strategies going forward, whether we get a resurgence of FOMO next week or on the upside or on the downside. So I hope that all helps. Okay, now I'm going to jump back to our ETFs. We've got a lot of topics to discuss within our ETFs topic. Just a quick reminder, once we identify a potential trade idea, be it long or short, then we jump to our ETFs Google Sheet. We can identify an ETF with the risk reward profile, the amount of leverage in whatever direction, again, be it long or short. We find an ETF that we could use to take advantage of that trade idea. And again, you can do the same, get 24/7 access to our ETFs Google Sheet as well as our other Google Sheets by joining our Patreon. Firstly, we're going to talk about some variety of opportunities with trading global markets. So we'll talk about Brazil and possibly some other countries, other global markets. So one of the enhancements I made to our ETFs Google Sheet is I added a link to this global indices webpage in the screener sheet of our ETF and Watchlist Google Sheet. So again, we'll talk about a variety of global markets. So if we go to the screeners tab of our ETFs Google Sheet, now under our major indices and technology and sectors, see global indices. So this is another tool you can find on investing.com. See, you can do a breakdown, different continents, or you can look at it globally. It's got a number of the major global indice providers. So you'll see DJs and we'll see FTSEs and MSCIs. So typically the ETFs are based on either FTSEs or MSCIs. So we can see China, etc. Australia, Brazil. Again, we're going to be looking at some ETFs for Brazil. So you can see the current activity, current performance in markets in various countries via this global indices tool. Again, we have a link in our ETFs Google Sheet. I believe I also put this in our links section on our home page. Yep. So under reference links in the link section on our home page, you can always find it there as well. So again, if you're interested in an idea and you want to see a performance of a global market, you can look at those. Also, again, many of these ETFs are based on these global indices. You can see the current price, so the current performance. You can also see the performance for different time frames, daily, weekly, monthly, yearly, etc. For a particular index. Again, we see Brazil's been down year to date, down, down. Also is very interesting is the technical section. So you get a technical indicator for that index. So we see again, we're going to look at Brazil was a buy. Now it's a strong sell. Look at the FTSEs. China, again, strong sell was a buy. That's kind of interesting. The MSCs for Brazil, again, strong sells. So again, all negative. So again, my humble opinion, I find this very useful to see both the performance, the technical indicators as to, India's gone negative. So again, I find all this very helpful if we want to go long or short on a global index or an ETF that's based on a global index. So again, let me know if any of you have used this global indices tool before, what you think of it. Again, we can access this now quickly and easily within the reference link in the screener section of our ETFs Google Sheet at any time. See how that global index is performing. See if there's an opportunity there to trade based on some other countries' global indices. So part of what spurred this is a discussion of Katon, also known as Easy Mike, had been talking about Brazil. So I wanted to take a look at Brazil. We had some ETFs. We've done some analysis of a variety of Brazil ETFs before, so you can access our previous analysis of some of these Brazilian ETFs via the links to the videos in our notes. The one leveraged ETF long Brazil that we had in our research sheet that I moved up to our main research sheet is BRZU. Also added a couple new ones to our research sheet. So these are both long Brazil. I also had seen this one pop up as a multiple bottom in FinViz on 11.4. So again, a couple indicators that Brazil might be a country in the global index we want to take a look at. Also, this BRF came up as a double bottom in FinViz. So a lot of indicators look like maybe Brazil was bottoming out. We wanted to do a quick comparison of these new ETFs to the ones we already had. So if we go to the research sheet in our ETFs Google sheet, we go to Brazil. We've got one short, as you can see, on Brazil, number of longs on Brazil. So BRAZ, BRF, BRZU, can leverage long, typical one, EWZ. It's iShares MSCI. We've also got another leveraged UBR. So you can look at all of those longs in comparison. So here's the new ones, BRAZ, BRF. So see their risk rewards are pretty similar, although BRF has a significantly higher risk reward bottom to top. 52-week, pretty similar. See they're pretty close to their 52-week lows. It looks like they bounced up a little bit. Looks like these perform slightly differently, so we'd want to look at their composition under the covers to see what those differences are. So if we look at BRAZ first in FinViz, so it looks pretty choppy, lightly traded. Looks like it pays a dividend, maybe semi-annually. AUM's very small. Volume, again, very small, so it's going to be very choppy. Dividend about 4%, not optionable. Looks pretty diversified. Petrobras, so oil. banks, Vail, where they're mining, some banks. So again, looks pretty diversified. This is based actively managed fund, so it doesn't look like it's based on one of those indices. Looks like it's actively managed. So again, performance been pretty negative. Looks like it's close to the bottom. It's relatively new. It's got pretty good risk reward. Again, relatively new, pretty thinly traded. So again, potentially choppy. We look at the other one, BRF, Annex Small Cap Brazil. Again, looks pretty thinly traded, choppy. You can see that multiple bottom. See, it's been trending down. Still, again, relatively small AUM, pretty light, pretty light trading. This pays a 6.5% dividend. This one is optionable. Again, pretty diversified. Copper. So again, this is small cap Brazil. This is based on the MVIS Brazil Small Cap Index. So again, if you think maybe small caps may outperform larger companies that we saw in BRAZ, looks like in the longer term it has. Shorter term, they've been pretty consistent. Again, that one's pretty close to its 52-week low. But again, we see BRZU, which is the leveraged long on the MSCI, has the best current risk reward, best 52-week risk reward, but not bottom to top. This BRF has a better bottom to top. Let's see how long it's been around. So it's been around for a while, pretty close to its bottom. So this BRF, it's been around quite a while. So again, that may be positive if, again, you think small caps in Brazil may turn around, may outperform larger caps. This BRF may be one that you find attractive. Again, if you want to trade a broader Brazil market, EWZ is the unleveraged. See, it's got a little bit better than some of the others. Pretty good bottom to top. And BRZU is the leverage. So those are the two we have in our main sheet for Brazil. We've got the one short and then the BRZU leveraged, EWZ non-leveraged. So again, love to hear your further input into what do you think of these two new Brazilian ETFs, BRAZ, BRF, comparison to some of the others that we've had. What do you think the best ETFs are to trade Brazil? What do you think? Do you think the Brazilian markets have bottomed? Is it a good time to go long an ETF in Brazil? And if so, do you like EWZ or BRZU as a way to trade long Brazil? So again, we'd love to hear your comments in the comments below in our Discord, etc. Do you think Brazil is a good opportunity? While we're talking, I want to I'll bring up another commentary that I investigated relative to Brazil. Let me grab a drink a sec. Just a couple other quick updates to our main sheet as I added USO, which is the United States Oil Fund. This is just a non-leveraged long on oil. I learned that USOI, which is that monthly dividend payer on oil, is not directly based on WTI crude price, but it's based on this USO, and it's not directly based on the futures, but this USO is. So we're looking for a bottom in USOI. I'm looking for a bottom or support in USO and not directly in the crude futures. So I added that to our main sheet. I'll come back to these other two new ETFs that were mentioned in a recent video by ETF Guide, and we'll do an analysis of those in the future. But again, you can find our research on those two new ETFs, and you can now track them in the research tab in our um, research sheet of our ETFs Google Sheet. So again, part of this whole thesis of whether Brazil was going to be a good market to trade is I asked ChatGPT some questions, starting with Brazil. So I asked, what will be the effect of a second Trump presidency have on markets in Brazil? So I put the link to ChatGPT's answer in the notes so you can read this in more detail. Got some subsequent questions, so a lot more detail. So would likely influence in Brazil's market in several ways. Commodities typically lean towards pro-energy, pro-mining. So that's good for Brazil's commodity market. So like we saw Petrobras and that BRAZ, etc., Miner and Vale, trade and tariffs. So tariffs on China, they think might benefit Brazil as an alternate supplier for Chinese agricultural imports. Currency and interest rates, pressure on the dollar, weaker dollar could strengthen emerging markets, but we saw, the dollar was going up, so that's actually a negative for emerging markets. Foreign investment, climate and environment policy. So Trump's policies tend to be less restrictive. So less pressure on Brazil to curb forestation. So again, possibly positive for some of the Brazilian benefits. So there could be near-term benefits for Brazil's commodity trade and possibly currency stability. So again, a second Trump presidency seems to potentially benefit Brazilian markets. So another reason we may want to continue looking at Brazil. So I also followed that question up with some other related questions, so like what other countries would benefit from a second Trump presidency and what markets may suffer. So I may have to put the links to those follow-up conversations in our notes. So I'm not sure why it didn't follow that up in the direct link in the notes, but I'll try to follow that up. And if I need to add additional links in the notes, I'll do that after we're done today. So again, I thought this was useful to find other global markets that might benefit from a second Trump presidency, avoid markets that might be hurt by a second Trump presidency, and combined with our global indices tool, and our ETFs Google Sheet, we can find potential opportunities in those global markets. Just very quickly to answer and follow up on a question that MD asked last week in the live chat of last week's part 2. He asked about one of the nuclear uranium ETFs that we have. He asked if we had NLR, and yes, we have NLR. It's one of the ETFs we have in our ETFs Google Sheet. It's in the research sheet, and we've done our previous analysis, quick take look at NLR. Again, this is a Van Eck Uranium Nuclear Energy ETF. So again, you can find and LR. You can hear our thesis, our discussion via the link to the video in the notes. And then if you just do a find on NLR or any other ETF in our Google Sheets, again, you can find we've got uranium and nuclear energies category. You can see some of the other uranium and nuclear energy stocks that we've looked at. I was mentioning in one of the chats the other day, if you're looking for a leveraged ETF long on uranium, URAX is a leverage long on uranium, and LR again on nuclear. Nukes is another one on nuclear power. So again, if you're looking for some long on uranium, nuclear energy, you can find those in our research sheet. Also, we've got others in our main sheet like URA, URNM, etc., URNJ, which is the small uranium miners. So again, plenty of ETFs, and you can compare the risk-reward profiles, opportunities for long uranium. I don't have any short uranium that I know of, so if anyone knows of a short uranium, that may be helpful. So if there's any others last minute that anyone in the chat wants to look at in our ETFs Google Sheet, we very quickly take a look at those. Talked about wheat coming down, so you can see it's getting close. Talked about the yen, although again, the risk reward's not terribly attractive. Talked about Brazil. Also, other than some of the shorts on biotech, like Lab D, I know Easy Mike, Katon, that he was able to catch that rotation down, spike down in biotech with Lab D. So congratulations on catching that. We've got plenty on Bitcoin, long and short. Again, we've seen plenty of FOMO in the Bitcoin arena. These are on the Bitcoin futures. Got a leverage long on Bitcoin. We also have others on cryptocurrency. Gold. And we've got several to short gold. So I know Katon Easy Mike was asking about ETFs to short gold. So we've got several. We've done some videos comparing these. If you want to short the miners, GDXD, if you want to, or Dust, DZZ, I believe, is based on the futures, GLL. So I would look at the composition of these, pick which ones are you trying to short the gold futures, short the miners. Again, GDXD's had a recent nice run. Just full disclosure, we've been long GDXD for quite a while. Probably got in too early, but now that's slowly headed back up. Similarly with silver, ZSL is the short on silver. Don't have a short on copper, long on copper, COPX. So I hope that all helps. We talked about solar. Again, sentiment solar continues to be very negative. So TAN very close to its 52-week low. Want to short the technology sector. Again, we're still long TECS. We'll talk about SARC tomorrow and SRTY, shorting the Russell. So again, you can find plenty of ETFs in our ETFs Google Sheet to long or short any index, any theme, any commodity. And we're continuing to add to and do more research to add to our ETFs Google Sheet. So we have plenty of different ways to take advantage of any trade idea, trade opportunity that we might find. So again, if you would like us to do research on any other ETFs, just let us know, put it in the comments to this video, add it to our comment in our Discord. Please tag us with any stocks, ETFs, etc. you want us to take a look at. We're BeachBum Trading, all lowercase, other characters, symbols, etc. Anyone else is an imposter, please report and ignore them. Otherwise, again, if you have any other questions, comments, stocks you want us to look at, ETFs, etc., please put it in the comments to this video or in our Discord. We'd also love your feedback on what we can do to improve our weekly trading game plans, any of the tools and resources, our Google Sheets, etc., that we provide. Also, we hope you will smash the like button, help us try to get the YouTube algorithm to someday show us some love, and share our content with more traders around the world. We really need your help to grow our BeachBum trading community for everyone's mutual benefit. So we'd greatly appreciate it if you would share and repost our content on your social media sites. Also invite your fellow traders to join us in the live chats, join us in the Discord, join the discussions of what we can do to make money trading, succeed in your trading career. So please help us, invite 2 friends and we can, triple our BeachBum trading community as soon as we want. So I hope this all helps. Please let us know what you think, what we can do to improve, and we hope you'll come back tomorrow, 10 a.m. on Sundays for part 2 of our weekly trading game plan for November 18th through November 22nd, where we'll take all these trade ideas, all these strategies, market analysis, etc. We'll select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list, and also how we can use dividend payers and several option strategies to also make money trading while we wait for our swing trading stocks to set up. So thank you to everyone that participated in the chat today, everyone that's watching after the fact. And again, we hope to see you all back tomorrow for part 2 of this week's weekly trading game plan. Thank you and have a great day.